Hello everyone. This is the pre-market report video for 16th February 2023 in terms of Nifty and Bank Nifty. Last night, again for the second consecutive day in US market, whatever the economic metrics, whoever they released was against what the market wants. On month-on-month basis, ideal market record scenario is to have negative sales growth data, and that is what US Government Census Bureau released for November and December month. To make it clear, November month retail sales was contracted by 1% compared to October month. Then again on December month, it further contracted by 1.1% compared to November month. So those were the ideal US market positive scenario. Contraction in the retail sales means lesser demand, then lesser demand means lesser inflation and thus smaller rate hike. So that's what happened till last December. And so US market was happy and everyone was happy except Indian market because of Adani issue. Now last night Census Bureau released the January month one, which comes as crazy 3% expansion compared to December month. Basically, the retail sales was more additionally added compared to last 2 months contraction. That's why I titled today as Crazy US Retail Sales. Just quickly, before into the topic, yesterday I titled the pre-market video as US inflation all hell breaks as a prank. Very few commented and took that very sportive, and honestly, thank you for that. Then again, very few were disappointed that I used it as a clickbait. To them, to be honest and promise, I didn't mean to use it as a clickbait. Genuinely, I was bored while writing the script, and to cheer me, I did that. To the fairness, it did actually become the clickbait. For info, for example, usually at the end of the day for my pre-market video, my click-through rate will be around 15 to 17%. Now for last video, to my surprise, it did came over 22%, which is 5% higher compared to the normal video. I just thought to tell you the little experiment about the human psychology and assure you guys that hereafter I won't put non-true clickbaits in the title. Anyway, coming back to the topic. As I said earlier, 3% increase in month-on-month basis is a crazy retail sales raise and indicating a very stronger US economy. This also made the 10-year Treasury bond yield to increase over 3.8% from yesterday's 3.75%. So does the inverted yield curve reached the high of over 87 basis points. In ideal scenario, all this data should increase the fear among the investors that Fed will get the free pass to increase the interest rate very aggressively. But none of those concerns were really shown in the US market. At the end of last night, Dow Jones increased by 0.11%, S&P 500 increased by 0.28% and Nasdaq was up by 0.92%. In case of US VIX, it too dropped by over 3.5% to near 18. If you see the tech stocks other than Facebook and Netflix, all others increased over 1 to 2.5%. Regarding oil, because of US government's large oil reserve inventories, it was just dropped by another 0.5%. At the time of this video, WTI crude oil was trading near $78.5 US per barrel and Brent crude oil was trading near $85 US per barrel. In case of Indian areas, only HDFC Bank closed near flat. All others increased over by 0.5 to 1.5%. Regarding SGX Nifty, at 3 am Indian Standard Time, it closed at 18,059, which is kind of indicating 30 points positive opening today. So this is what happened on the global market. Now let's move on to the Indian market related info. First, yesterday in the aftermarket hours, Indian Ministry of Commerce released the trade data for the January month. Import value for January month comes as $50.66 billion US dollars, whereas export value comes as near $33 billion US dollars. Here, please note the trade data is only for merchandise goods and not including services import and export. So the trade deficit comes as the 1 year's lowest value of near 18 billion US dollars. This is really very positive news for India, since in the last 8 to 9 months, trade deficit was always in the range of 25 to 30 billion US dollars. Even for the December month, it was near 24 billion US dollars. It means India is importing 24 billion US dollars more goods than they were exporting it to the foreign countries. Lately, in the last 1 year, this became the huge headache for the Indian government. Now that reduced to near 18 billion US dollars. So that's the first positive news. Then the second positive is regarding taxes. I mean, according to Reuters, now Indian government are considering to reduce the fuel and maize tax to cool the inflation. And I think that's the reason in the past 2 days, Reliance increased over 5%. Since the present showstopper in the Reliance is this newly implemented windfall tax, so reducing the fuel tax will be huge positive for Reliance. Then the third news I like to highlight is regarding Indigo Airlines. Since one of the co-founder's wife is planning to sell near 4% of the Indigo stock in the open market, this information is clearly negative for Indigo stock. Then the final information I like to highlight is about the institutional activities. I mean, yesterday too, for the fourth consecutive day, FII net bought shares worth approximately 430 crore rupees and DII too net bought for near 520 crore rupees. So as a net institutional, they bought for almost 950 crore rupees. As a summary, despite the good retail sales data, US market closed positive. SGX Nifty is indicating positive opening and most of the Indian areas closed positive as well. Based on stock open interest analysis, MCX India, Indigo, Bata India and Bharat Forge all four got the huge short build up on it. So recommending to be careful on these stocks while day trading. Regarding the items to look out, there is a schedule for releasing the Nestle Q3 earnings today. About macro, at 2:30 p.m. Indian Standard Time, European Central Bank is due to release the Europe's Economic Bulletin, which will explain about the future prospect of Europe. Then in the aftermarket has a bunch of US housing related macros such as new housing starts and number of new building permits are due to release. Additionally, weekly new jobless insurance claims data. So these are some of the important things we need to keep an eye out today. Coming to technical, yesterday Nifty opened gap down of 30 points. Then in the next 30 minutes it dropped another 40 points, but quickly it recovers all its losses and trades flat till 2:25 p.m. Finally, in the last 1 hour, it shot up over 100 points and forms a long bullish candle with a short upper and lower shadow. Finally, yesterday Nifty breaks the budget day candle high and closed above the psychological level 18,000 mark. But still, significant call option open interest is present at 17,800 and 17,900, whereas 18,000 got substantially high call option open interest. So today, opening above 18,000, I expect the fresh round of short covering, which I believe it will take the Nifty near or over 18,100 mark. Anyway, in simple term, Nifty forms a higher bottom formation compared to the previous candle, which indicates the higher possibility of further uptrend from the current level. Whereas Bank Nifty forms a hanging man pattern, which is also a positive candle. Coming to moving average, for Nifty in daily chart, in comparison to Tuesday closing, it moves above the 100-day simple moving average and 50-day exponential moving average. At present, it trades only below the 50-day simple moving average. So as a summary, 11 in favors and 5 against it. Thus, the summary improved to strong buy now compared to just buy signal on Tuesday. In terms of technical indicators, it is still the same buy signal. Again, for the second consecutive day, Bank Nifty summary is same as Nifty. I mean, on moving average summary, it's a strong buy signal, and technical India summary, it's just buy signal. Turning to options, for Nifty, first from change in open interest, almost very few call option open interest were added and huge number was unwinded between 17,800 and 18,000 and huge quantity of new put option open interest were added at below 18,000. So it's difficult to get any conclusions from this data. So from overall options open interest data, 18,000 got the huge short straddle and 17,800 got the maximum nearby put option open interest. So 17,800 is the strong support for this expiry and the maximum nearby call option open interest is present at 18,200 and thus 18,200 is the strong resistance. For Bank Nifty, based on change in open interest, it's really very weird. Some number of new put option open interest were added at below 41,600 and small quantity of call option unwinding took place at below 41,600, whereas lots of new call option open interest were added at above 41,800. Again, it's hard to draw any conclusion from this. However, based on overall options open interest, we can see that 41,000 level will be a strong support for this expiry and 42,000 level will be the immediate resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the videos. It will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.